one that has a very, very sexy title. It says India Fintech Frontiers Path to 2 trillion and beyond. So I think we're moving beyond the billion conversation and we're moving towards a trillion conversation. But before I get our panelists on stage, there's an Avas masterclass on media happening in the room next door. So if there are any folks interested in that, do make your way. But of course, we'd love to have you in this room as well. We have, please welcome on stage with me, very, very exciting fintech founders. Shinjini Kumar, who's the co-founder of Salt. Mehul Jindal, who's the co-founder and CEO of Bharatx. Priya Karnik, co-founder of Pay3. Sahil Kini, co-founder and CEO of Setu. And it's my pleasure to invite my friend on stage, Miten Sampat. Miten is chairing this panel. And many years ago, he was with Times Internet. That's when I think you and I discovered each other, Miten.
Yes.
And then he gave up the world of media to go towards the world of fintech. He said, I'm joining CRED. I asked him, what's your title? He said, we don't have titles at CRED. So I'm thinking he's the CRED guy. He's the guy from CRED. Like, building CRED is what he says.
Janitor.
Creditor.
Janitor.
Anyway, guys, please give a big round of applause to our panel. And over to you, Miten.
Can I take that? Thank you so much. Thank you for the whole panel. Thanks for making time. I know you've all, in fintech, there's never a dull day, right? Like something that happens every hour. So thank you for making time. We're going to try and focus on this one topic called, India's digital economy today. It's somewhere in the $200 to $250 billion number, and what is it going to take to become a $2 trillion economy? That's the focus of our panel. And then within that, what are fintech companies as enablers of the digital economy going to do? Maybe what we can do just to start is, Shinjini, with you, we'll start, we'll go this way, just a brief introduction of your company, what you do, and then we can get started.
Sure. I'm Shinjini Kumar, and I have a startup called My Salt app. It's there. You can Google it. We are building fintech for women. It's very exciting. We will talk more about it in the panel. I've had 30 years of experience in the banking system, and what propelled me to do this with 2 other co-founders was the fact that even though the nature of technology has changed and financial services have expanded, the gender representation continues to be marginal. So we wanted to work on that, and that's where we are.
Awesome. So hey guys, Mehul here from Bharatx, probably the only Gen Z speaker on this panel. And so we are trying to solve consumer lending for the Indian middle class and the upper middle class, most of whom we believe come from an unorganized income sector. And everything from your buy now pay later to your home loan is what we try to solve over the next decade or so. And that's that.
Thank you.
Hello, my name is Priya. I'm the co-founder of Pay3. At Pay3, we're building payment solutions for digital first businesses, the micro multinationals as we call them. And we are building businesses because these people operate in multiple markets at a very young age, and our payment solutions kind of makes their experience seamless. My experience in banking, payments, fintech, Span City, and Paytm. I've also been the founder of Varamani, where we focus on the urban underserved.
Hi everybody, I'm Sahil Kini. I am the founder and CEO of a company called Setu. We build infrastructure for fintech, which basically means we connect regulated financial institutions to other applications that might want to embed their products into their apps. The reason we built this, I had the good fortune of working with the early team of Aadhaar. I was part of the core team that developed the India stack, including UPI, account aggregator, DigiLocker, all the things that we use so much today. And India still needs a lot more infrastructure. India needs these products to be a lot more accessible from multiple access points. And so making that possible by building the piping underneath is what my company does. About a year ago, we sold our company to Pine Labs. We continue to operate as an independent entity within the Pine Group. And yeah, looking forward to an exciting discussion.
Thank you, everyone. I work at a company called CRED. We help you pay your credit card bills on time and get rewards. And so if you haven't downloaded CRED, you should download CRED. Great rewards. Prior to this, I was at Times Internet, so worked across a lot of different use cases, Ghana, Magic Breaks, MX Player, lots of things, Economic Times, Great Buzz. But anyway, before we start, I want to just maybe call out a few numbers, right? I think while we talk about the 10x scale from here, I think India is already at a pretty significant scale when it comes to internet penetration, mobile payments, proliferation of lots and lots of things. All the metrics I think most of us probably know. But since we already have so much of this, isn't everything in place already to really scale and take us to this? Well, what do we need? What's missing? And along with that, I guess the key question for us to think about is, what are the things we did right to sort of get to this scale, right? Like let's talk about it. There's about 500 million sort of consumers that already have a smartphone or some form of internet, meaningful connectivity already happening. The phones obviously internet's reached every sort of household already. There's 500 million bank accounts which are actively used with some form of money. Actual number of bank accounts is even bigger. UPI is doing crazy stuff. The account aggregator platform is there. So it almost looks like everything is there. Like, is anything left to be done? But maybe, Sahil, we can start from you. Like, is everything in place, or is there a lot to be done still to sort of make this 10x happen?
No, I think there's a lot more work to be done. To put it very simply, we've just about gotten started. We've managed to put in some kind of infrastructure to enable half meaningful participation. For these numbers, India is a very big country, and numbers can be very misleading. Averages can be misleading. But if you actually look at it, and I'm sure Shinjini can add a lot more. She's watched the economy grow post-liberalization, but half our country is below the age of 25. So again, half the population is women, of which the workforce participation rate is absurd, below 10% kind of this thing. So the income generating potential of our economy is nowhere close to where it can be realized. And for an economy to actually grow, people have to earn and then spend. So I think even though our GDP per capita currently is I think like $2,200 or $2,400, again, you take the top 100 million, which is 1/15 of the population, out, and then suddenly that GDP per capita drops to like $1,200, more than halves. So I think there is the core infrastructure for identity, the fact that we have high speed, low cost mobile connectivity, internet connectivity, the fact that we have an excellent mobile based payment system, the fact that we have now a data protection law and a data sharing framework with the account aggregator. All this work happened only in the last like 7 to 10 years. And it's like a brand new engine that's been put in place. We have a long way to drive to actually get to where we need to go. So I think the economy itself has to grow. I mean, I come from a business family business in manufacturing. The ability to build a business is still incredibly difficult in this country. You still have lots of inspectors and lots of licenses and lots of pain to run a small scale business in this country. And a lot of people in this country simply don't earn enough. So I think that the growth has to be much more broad based, that expenditure has to come into a decent amount of force, which will eventually lead to more business. So I think a lot of infrastructure is in place. A lot of stuff needs to be fixed with that infrastructure. We can talk about what that might be, but I think we're just getting started.
So and I tend to agree with most of what you said. Shinjini, from your perspective, I think what are the things we've done right to get here, right? And I think then we'll get into entrepreneurs and makers, what should we do after that? But what have we done right so far?
So a couple of things. Just to start with, the 10.
And I just want to add one thing.
Yeah.
Right? Like, see, as builders, we'll all appreciate that our companies have roadmaps, and the country also has a roadmap, right?
Yes.
You have to do things in a sequence. You can't
Yes.
suddenly put, something which is not ready for now. So just maybe talk to us about that a little bit, sequencing and what we've done right.
Yes, so I think one of the things you learn as a builder, founder, business person is to work within the art of the possible, right? So you don't solve problems that you can't solve, and you solve problems that you can. So, of course, 10x is not a very ambitious number from that perspective, because in financial services, as you know, as the economy grows, it's some inherent, sort of multiple that you get. So we will be able to do that because number of transactions increase. There is an inflation that gives you higher nominal values, etc. But what we have done right, or how we got to this point where we got, is through the creation of this infrastructure, right, which we talked about. So I don't want to belabor that point.
Yeah.
But because I have watched this economy, just for people who don't know me, I started working in the 90s when India was liberalizing, and I used to work in the Reserve Bank of India, and I used to handle FDI into the country. So, I saw the opening of the doors. So I saw the shift from a very different nature of economy to a very different economy. And then we saw that shift again and I won't focus on the first round of the liberalization because it was too nascent and it will sound alien to most of you. But the second round is very relevant to you. And yesterday I was at an event in Mumbai and Uday Kotak was speaking and we were talking about bank licensing. And I'll just take a minute to tell you about slightly more macro framework of growth. And that is when this technology shift happened, large CBS, the making of the city of Bangalore, right? Core banking, software exports, Infosys, TCS, that momentum created a very large number of employed individuals in this country. That also coincided with many multinational companies coming to India, BPOs. So for the first time in India, you saw the emergence of a large number of people who had jobs and salaries. Because uske pehle it was my father's generation, public sector jobs and government jobs or business, right? So that, from the perspective of what did it do to financial services, right? Because that's what we are interested in. What it did to financial services was emergence of a new sort of type of banks. So from the public sector banker, you now had the private sector banks. You had a lot of innovation. You had these hub and spoke banking, you had core banking systems, you had, I don't want to get into it, but all of you now take these brands for granted, the ICICI, the HDFC, you take them for granted, Edelweiss, IIFL, all of that got built, right? Because of that fundamental change in the economy. What's happening today is that the nature of technology has changed so much that it is leading to another very major shift in the nature of the economy itself. So there is a lot more people who are, for example, doing gig work, right? There are a lot more people who are not earning that salaried 30-year job and getting a pension at the end of it, so that I don't think my father ever thought about investing or saving, because he knew when he would retire, he would get some pension and he would get some house loan at some stage in his career. But our generation started to do that because we wanted to have options. Everybody in my generation wanted to retire at 50. I did, and then I decided to build a startup, but that's another story. But now, nobody wants to work till, Mehul said is the Gen Z, we should ask him. Nobody wants to work till they are 50. Nobody even wants to have a point of view on working till 35. Everybody just wants to...
I just said 4-hour work week, right? Before this, 4 hours work.
Yeah. So when people want to have those options and those choices, it has to change the nature of finance in a very fundamental way, because now finance needs to meet that need of the people.
Yeah.
So I don't want to take more time, but the point I'm trying to make is that these shifts that happen, they affect how you build your businesses. So 10 times is not a ambitious enough target from that perspective, right? Because it's finance, so it always grows 3 times more than what the economy is doing. Yeah. So we have to think more qualitatively also in that sense.
Got it. Thank you both. I'm going to go to Mehul. Mehul, from your perspective, for your business and for a lot of the use cases you're building, how is it? What are you looking for? What does the infrastructure need to enable for you? And talk a little bit also about any of the regulatory challenges that are sort of getting in the way for you to do that. Like how will you grow at like bits scale?
So, just for context, right, we're trying to solve lending, and India is, and it's a very common story, right? It's heavily underpenetrated, 3% credit card, so lots of space to grow, all that, right? But in order to crack lending, the key thing that you need to do is first and foremost crack the risk component. Risk is understanding how much can this person pay me? Does the person have the intent to pay me? And do I have the means to get the money back as well? That's risk. And the second is distribution. Let's say I figured out wonderfully well that, I can solve risk. Look at, let's say, Bajaj Finance, right? They're able to solve risk, have low NPA, give money to people, but can they distribute to people? Can they distribute to the new digital economy that we want to build? Are they ready to lend on Tata's online store, the Chroma store, or let's say Reliance Digital's online store? And the answer is no, right? That's a fact. Like they don't, even though they process like more than 20-30% of their volumes offline, they have zero volume on the online websites of these same very players. So the challenges are essentially around how do you crack these two things. The second one is a bit easier because that's more of a product business strategy mindset, right? You can always go on a B2C approach, like I think what CRED is doing wonderfully, and get customers, give them financial services. Paytm has been doing it, and it's doing well as well. We are taking the B2B2C approach where we enable credit as a feature, where we are taking the P&L risk, but distributing through other brands, like let's say introducing Swiggy Pay Later or Chroma Pay Later, blah, blah, blah. But then the first part, the risk part, is what's really challenging, right? There have been regulatory breakthroughs, is what I would say on that end. For instance, last week we just went live on actually disbursing account aggregator based loans. Now what that did was within 2 OTPs, we could now finance transactions worth up to 1.5 lakhs all the way up from 15,000. So that's a major shift, right? Until now, if I have to do digital lending and I have to do it in a smooth and a better product, someone like you in the room who doesn't want to like spend half an hour, 1 hour answering, this is my company's name, this is my salary slip, this is blah, 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 blah. For me to be able to build a good product, now it is possible, right? And let me tell you that account aggregator is the only framework in the world who is so powerful. Like I don't think even Europe's open banking framework is as close to what AA has been built on. I think what we did right, to be honest, to reach here, is we allowed a lot of private market participation in the financial services. If you look at the PhonePe, Google Pay, Paytm, right? If you look at, let's say, enablers in the industry or startups in the industry, right? We all in some form, like all of you, right, today here must be using HDFC, ICICI, Axis, right? 3 decades back, they didn't really exist. So it was that wave of enabling private entities to participate in the financial sector, the government and the regulator led, which helped it. Even for innovation, for Aadhaar, for UPI, for account aggregator, the government was open enough to take inputs from the private industry and let it happen. So I think that's what we did right. And regulatory challenge-wise, I believe that there's always 2 sides of the coin. There's one side of the regulatory thing that it is required. It's a good step. I mean, in the last couple of months, RBI made FLDs illegal. RBI recently launched a digital platform for lending where it's made extremely easy. At the same time, they also changed PPI rules and whatnot. So there are always 2 sides of the coin. You need to really understand the perspective to understand why they do what they do.
Thanks. Priya, any thoughts from you?
Hi. So I'm Shinjini and Mehul has spoken about...
I was hoping that he would say he's looking at people's Instagram behavior and underwriting based on that. But he's saying he's looking at SMS. So मतलब Gen Z का कुछ अलग होना चाहिए ना? Account aggregator. वही मतलब account aggregator. But anyway, over to you.
So I think you've covered what we've done. But, so my perspective is, what is it that we need to do more to grow the PX?
Yeah.
Where to put those into 2 buckets. I would, say newer rethinking financial products. And you alluded to some of that, right? And the second is embedding financial products in the journey of a core Coming back to rethinking financial products, we have made a lot of progress from the initial, segment overhang that we had, large enterprises, then moving on to small enterprises, individuals. Now, what is required to move to the next level is, and this is primarily driven by mostly innovation on the one dimension of ticket sizes, right? You take a product, make it suitable for a smaller ticket size, and then satirize it and send it across. We need more innovation on many dimensions. Like there are things that are set in our minds. For example, a unit for a loan is a day for most people. A savings is probably a day, right? What about 4-hour loans for a particular business or for a particular segment, 4-hour savings, right? And that those dimensions on which we need to rethink financial services needs to expand. The second is interoperability. While we have great public digital infrastructure and that's phenomenal, we also need to see how financial services is driven a lot by data. So how do we, get data and financial services to work very well together? Account aggregator is a great step. So let me give you an example of what we used to face in Dwara. We used to ask, 3 months bank statement. The person who was new to digital experience used to go to the website of their bank, and the default there is 2 months bank statement. And now the person starts. Right now with A, it's like a chat GPT prompt. Whatever you want, you get that. So those innovations make a material difference to user experience of the various segments that we need to cover. So AI, open, digital public infrastructure. The other piece to, which I need to touch upon is our assets today, whether you look at payments or, our securities are all digital, and that's great. But they need to become programmable for us to truly get to the next level. And by programmable, I mean it is smart. When you make a payment, there is always a reason behind why you make a payment. It could be some trigger, some conditions that you need to fulfill, right? Or certain personalization aspects that you need to do. Now, for all these to provide the base infrastructure, we need to think about programmable assets. Now, we've taken a step in CBDC with programmable digital currency, but that will provide the base for the next level of personalization, next level of efficient financial products, and hopefully a lot more underwriting models. Right? At Dwara, savings behavior is a driver for underwriting, so we need a lot more underwriting models.
Sahil, you have a view on this?
I think, I had this dream when I was starting Setu that we'll be able to innovate on the types of products. And she's right, you can innovate on tenure, you can innovate on ticket size, you can innovate on end-use monitoring. Is it for a particular purpose, or is it just being disbursed as an open-ended loan? The thing that I realized as I spent the last 5 years, half a decade now in trying to do this, is that you can't do it, one, without a license and being the product creator yourself. Doing it in partnership is incredibly difficult because you're trying to move an elephant into doing a completely new trick. That's very hard. Second, getting a license is possibly even harder. The last universal banking license that was given out, I think, was Bandhan Bank, and that's after a long journey. And third, even if you have that license, the regulator has very strong perspectives on how a bank should operate. So it's not necessarily, a tabula rasa. It's not a clean slate where you can just invent a new product and put it out there. There was the last, I think, really interesting product that came out in financial services, in my opinion, was a ride insurance that Ola introduced for 2 rupees, which was a truly micro sachet financial product. I don't think there's been a single, other than UPI payments, anything in the unit size of like 1 rupee, 2 rupees. I think it would benefit the economy tremendously if we were able to do so. But I think there are lots of institutional, regulatory, and design roadblocks that come into play when it comes to building those kind of products. And the second aspect, again, to Priya's point around what she called programmable assets, or a fun way of putting it is self-driving money, which is, if you read Taylor and Sunstein, you read basically the guys who won the Nobel Prize for behavioral economics. They talk about the power of a good default, right? So when you make a default savings instrument, for example, an ETF, very rarely people don't like the cognitive load of moving away from a default. So if the default becomes the most chosen option. There are several interesting examples of this. When one fun example that I can tell you is, like, they introduced an emergency booking system for hospitals in Hyderabad when a lot of these new ambulance and emergency services came in, and when they analyzed the data for the booking, they saw that most ambulance calls were for abdominal pain. And they were like, why are people getting so many stomach aches? And it turns out that the cause, abdominal pain, was the first one in the alphabetical order, AB. So it's like the power of default. Defaults are very powerful things. And so if you can set good defaults for the population, it can do very powerful things. But again, that whole aspect of, can you give power of attorney to an algorithm? Right, is a complicated question. Now, it's futuristic and fun to talk about, but again, life has a way of getting in the way. Real life is full of these kind of practicalities.
Let's get creative. Like, what are these ideas? It's a great idea what you just spoke about. Give an algorithm the opportunity to decide for
the
you.
Power of attorney. Yeah, it's scary, right? When you think about it. Then it comes to, again, we are a very paternalistic state. We like to prescribe what we think is good for the people, and in a lot of ways that's been very beneficial for the disenfranchised people in our population. But it's tricky, man. It's a lot of policy to talk to get through. It's a brilliant idea, I think, but it's something that will take a long time to get implemented in reality.
Sahil, be optimistic.
I mean, that's great. There, I was thinking of starting with things like, all of us would need a mechanism to establish trust. Because today, for example, opening this program is such a pain with KYC, etc. All those things can be simplified with digital contracts, and with the trusted party in between, can bring a whole lot of efficiency in terms of, and it can increase transparency as well. So, for example, if I'm donating or giving grants, I'd love to see where my money is ending up, right? So, for specific use cases, I think it's a good place to engage.
Yeah, I mean, it would be interesting if you could actually trace money all the way. Unfortunately, money is fungible, right? Once it goes into a pipe, it's just anybody's money, and that becomes very hard. Look, I know we'll probably run out of time, but I want to ask one question to all of you. What's your wish list? It could be product, it could be regulation, it could be whatever. What's your wish list to really, I agree with you, 10x might be a little too timid. Let's talk even more aggressively. What's on your wish list for things to happen? You want to start? Anyone can start. Mehul, you can start.
Yeah. What's on my wish list? I think fundamentally, at least in the fintech sector, right? Like I think Sahil touched upon that, working with the elephant is harder, and becoming the elephant in itself is impossible. Like the last time it happened was way back. So the opening up of that, right? Opening up of licenses, giving license and opening up of business where there is freedom to create in a creative way, right? Like today, if you look at platforms, they're raising deposits for people. On the same platforms, they're also lending, right? Or maybe different platforms. But the fact is that digital fintechs are doing all this. But still, there is heavy regulatory control, extremely, to the point that working with those elephants is a must, So if I had a wish list on how we could accelerate this journey and get them much, much faster, would actually be sort of cutting out all of this. I would be bold and say slightly unnecessary things.
Sure.
Up to a certain scale, like a scale-based licensing framework or something like that could really be helpful.
Good one.
So while Mehul wants the license, my wish list would be that I shouldn't need any license at all. I've had enough of those. So what I would want to actually be able to do.
But that's what happened in late 93, right? Like some license nikal do, basically.
Yeah, no, so what I think financial services needs is that people with licenses can actually be more B2B, because in any case, they're more interested in solving the problem of the country's largest corporates who are also growing than solving the problem of, people who we want to solve for. So instead of putting their towel, handkerchief on every seat, they can actually focus and do what they want to do. And we can actually go ahead and, what you said, Sahil, right? We could actually do that. That's, I think, all of our dream, right? But obviously, we know that's not happening. But I have to add something to your abdominal pain example. So we have a product, our core product is what is called a passbook. So basically, it's a ML tool where you can put your accounts and it gives you your money map. But fun part is that we realized that too many people were spending on alcohol. When we were looking at the data, we saw a very huge volume of alcohol expenses. And I said, that can't be right. And then we realized alcohol was the first on the default. So people who were lazy were not bothered to classify. So yeah, so we should actually want to solve problem for the user. We should stay focused on, because that's what is not in the, it's not possible for large institutions to do that. That's the nature of the animal. Whoever will become so large will not be able to solve for that person. So there has to be this spectrum, this continuum of solutioning, where we have to continue to solve for that user. But because we get so caught up with the, with having to do things in the same way as big people, that it's hard. And I can see that because I've done it on both sides, and it's really not a very nice thing.
Yeah, I am with Shinjini and Mehul here. I think there needs to be a wholesale retail.
She wants the license also, and she wants the freedom also.
No license.
Yeah, that's what she wants.
License. So this tier structure work best because each segment is, it's going to be different, and you need innovation to happen to be inclusive.
Sahil, you build all the infrastructure for all the fintechs. So we're all relying on you, basically.
Yeah, what are you giving us? You have to solve all problems.
Everybody, we'll solve it all. I think a fundamental wish that I have that I think will unlock a lot is India needs many more accounts, all kinds of accounts, loan accounts, credit card, insurance, broking, every type of account you can think of. And so to open those accounts, the thing that needs to be simplified dramatically is KYC. It is still far too complicated. It is still, even with all this digitization, there's far too much failure rate for, anybody beyond the top 200 million in the country. It is still painful as hell. It depends on, they're like, please somebody just end OTPs once and for all. It's a mess, and I think, every financial institution having to do a fresh KYC every time, even within its own bank also sometimes they have to do multiple KYCs for different types of accounts. Let's not make it so hard for our people to get what they need. Let's solve for that first, and then we can look at giving algorithms power over it. And
makes sense. Okay, look, I'm actually very optimistic about all the things that are happening in financial services and fintech. While there are all these challenges that we deal with, I recently went to the US and I was in the UK, I went to Japan, multiple places just to understand markets. And I have to tell you that our market is actually the most vibrant and the most programmable by all stretches of the imagination, right? And so I think there's no other place I'd rather be, and I think this is the place. That's the place. I think we're optimistic about. I don't know how much time we have. I can probably take 2 questions if anyone has any questions. We have a very interesting bunch of people who can probably give you perspective. Yeah, there.
By the way, while the mic reaches you, because I was told in the morning that what can I do for you? I do want to tell you that if you're building in that space where there's anything I can do for you to understand things, I'm happy to help. There's only one thing I know.
Hello everyone, my name is Rakesh. One thing I struggle to understand is money is extremely personal for people, right? Very, very personal. So when you're building wealth tech platforms or fintech platforms, how do you solve for that? Like how do you build that trust when you do not have a brick and mortar solution like elephants have, right? Like that's the avenue of trust for some people when you have a brick and mortar bank. Whereas when you have wealth tech or fintech, how do you solve for the trust issue when it comes to giving their money to you to invest them or whatever, right?
Actually, if you think about it, it's actually easier to do than it is in the reverse scenario. So when I was in Paytm, and a lot of people used to ask this question about branches, right? Because that was the time when we had all this discussion about bank branches versus no branches. And I agree with you that this whole idea of branding, and in the morning we had that session about branding and marketing, the whole idea of building that brand was to build that trust, because that was the only way, that was the only discoverability, that was the only way to connect to that person. If you were not seen in the downtown with that city sign, then you were not relatable. But today there are a plethora of options available that build that same level of trust. So for example, we don't spend on brand. We don't have that kind of money yet. But just because we built an Instagram page in a community and people followed us on Instagram, we clearly find that the age group of 18 to 30 who follow us on Instagram or who are that population segment, they find it a lot easier to give us their money than the population which actually expects us to see on the neon sign. Okay, so that's one thing. So essentially the use of the personal device is one part of the story, but the equally important part of the story is how do you actually become worthy of the trust of the customer? That problem is not a problem that has changed because format has changed. You needed to be, so in city, for example, when I went to the New York office for the first time, there was a wall which was from that wall to this wall, which has screens, which is tracking cyber attacks across the world, right? There is zero compromise that you, and still you will have attacks and still you, so that trust you have to earn in every scenario. So even today, you have to be able to build your technology in a way where it is safe, where you are not using their data for other things, where you are anonymizing. And the good news is that you have the ability now to educate your customer or to share with your customer what you're doing. What we did in large institutions, that was blind trust, that was implied trust, that was only backed by regulators. When the financial crisis happened, that trust broke, and how? Like, you just have to, it just scarred the psychology of an entire world because that trust was built on blind faith and it broke. So we actually have the opportunity to build it. Whether we do it, in the right way is for us to, it's for us to lose actually if we don't do it. But it's a very good question, and we all need to deal with it every day.
Anyone else? You should say that. Well, I think, she did a great job, so very little to add. Look, I think it's in some ways easier now, if you ask me, right? Because more people are already very tech savvy. People are used to using their phones for lots of things. In India also, there's a lot of trust that spreads from what we call PLU, people like you. And so the rate at which and the pace at which this sort of word of mouth happens is like unbelievably fast. And I think that, imagine today if you had to build up any financial institution that had to grow physically, none of this blitzscaling would happen, right? Like, there is no way most of the people that are sort of the large-scale platforms could even exist. So actually, in many ways, it's much easier, and it comes from familiarity of transacting online in all ways. Ultimately, though, that there are some marks of trust which are important, right? And I think all the apps that you see very explicitly, not implicitly, very explicitly show you these marks of trust. RBI certified, SEBI approved, IRDA licensed, XYZ. And so these things are like right up there, right front and center. Also, what happens is, I think the mechanisms of finding bad players has also accelerated fast. So if anyone's doing something bad, social media may in a day or two you'll find out if some entity is doing good or bad. So as a result of that, the risks, perceived risks, I think have come down a lot. That's a great question. One last question. Are we done? No more time. Okay, thank you everyone for your time. Thank you for an intense and interesting discussion. Sorry?
Can I ask one last question? I'm here.
The boss is saying no. We can chat offline. Thank you.
They're all around. Please do ask the question to them. Thank you so much, Shinjini, Mehul, Priya, Sahil, and Miten. I wonder, where did the 10 trillion number get revised to? What was it?
The what?
The 10 trillion got to what? What is the new number?
Well, it was 2 trillion, so we'll take 10 trillion.
We'll take 10 trillion. Amazing. Thank you so much, guys. That was a fantastic panel.
Thank you.
And
Photo. Beach right. How about you?
Miten ko nahi diya.
Sponsored by.